Saturday or Sunday, I'm going to start with the trend. So if you look in the room, okay, you look in the room and we have the trend here. Okay, and in front of you, you can see this, the trend. I talk about the SPY, the Qs, the IWM, and the DIA. These are the ETFs, right? The SPY, QQQ, IWM, DIA, which is the Dow. The VIX, Volatility Index, the SKU. I talk about the P call. I talk about the bonds. Okay, and then we also go into, if we scroll this thing down, we also go into gold, the dollar, okay? And I also like to update the fear and greed index, okay, to kind of give you an idea. And then I'll put my notes at the end of the week, right in here, okay? So this is the first place you're going to look over the weekend. And then I'll put the notes in there and kind of give you an idea of what I'm looking for in the market. Now remember, when everybody's fearful and we're typically prices coming into demand, right? These fear gauges, everybody's going to be scared. What do we do when everybody's scared and everybody's in put positions? We push the market up, right? So the market ends up going up, but we want to be sure that we're in demand zones and so forth, okay? So remember, beginning of the week, you're going to come over here, you come to the trend, you're going to check these out. If you have questions, and I'm telling you guys, there's so much information in this room, I just need to guide you and navigate you to the direction that's going to make it easier for you. You can literally trade these charts over here, okay? If you just want to concentrate for the week and look at these and say, hey, John, I like this chart, you know, what does this mean? Maybe you need more detail on it or something, okay? All right, so let's get this out of the way just really quick. And then after you're done doing that, you're going to see that come Monday, okay, even Sunday night, I'm going to update the futures with a blueprint. The blueprint's pretty straightforward. Let's go over here and see ES just really quick and see what we got on here. Okay, the blueprint is used by using a 5-minute candle, the line in the sand, okay, and then these green lines that I use are just supply and demand. Okay, that's why they work. You see price come into demand and it bounces, you're like, wow, man, it bounced right at the green line, right? Now this is pretty simple. On my charts, which I'm going to be releasing all this stuff to anybody that's open that wants it. Most of the members in the room already have the edges. The only thing that they don't have is like the line in the sand and the PMZ, which we're going to get into soon. So you're going to see like these cool little arrows. Like I don't even have to work that hard, right? I just look over here, look at some arrows, I draw a line, and you know I would expect price if it starts to bid below the line in the sand, we come down here to T1, which is lined up with some demand. Okay? So that's the first thing you're going to start looking at on Sunday. So if you're a future trader, you're going to go over to the futures. If you're new to futures trading and you want to know more about it, I'll send you a video. Second thing is, if you're a futures trader and you want to trade something outside of the ES, just let me know. John, can you do me a chart on the NASDAQ? How about the oils and CL? Okay. Now that's Sunday. Now on Monday, you got to come in and we have the focus trades. Okay. So the focus trades, there's been a couple questions, and if you guys want to ask questions, please do that right now in the main chat around the focus trades. Some of the questions that I've seen over the week was, hey John, how do you pick your focus trades? Right? And so I've explained this a couple times. Here on Thinkorswim, I simply can come over here to the trade flash in the morning, and it's giving me a rundown of some of the big things that are happening in the market. But also in our room, you can see under earnings, we understand what kind of earnings are going on. So if we had earnings on Monday night and it's something big tomorrow, I'm looking for those names that we're looking for big moves to happen. Okay. Despite what the market's doing, I really don't even have to really pay attention to that because these names are going to move in the direction that, you know, investors want after the earnings. Okay, so I'm like, I could just tune out everything else and just concentrate on our process when it comes to earnings. Okay, so I'm looking at the trade flash, I'm looking at earnings, I'm looking at some kind of catalyst, whether it's an upgrade, a downgrade, and so forth. Okay, so that's the second thing that I'm looking at. All right, so then I'm going to do, after I pick these names, I'm going to pick 4 names and I'm going to put them in the focus trades. And then once I put them in there, I have them set up on my screens and I'm ready to trade them. Okay. And then somebody has their mic on, just so you know, whoever just coughed. I don't know who that is, but just so you know, your mic's on. And then, after the focus trade, then I'm going to do the morning trend. The only time that I won't do the morning trend is if I'm running out of time. And a lot of times, if we have a big catalyst, like say there's some kind of FOMC or their jobs report or something, to where I know that this is really going to impact pre-market and what the stocks are actually already doing. So I have to wait even longer to really get the numbers that I need. And if I wait too long, not that I'm being lazy, it's too late in the morning. I can't make the video anymore. Okay. So again, these are going to come out. Then I'm going to make the morning trend. It's very important, I believe, and that's not me being biased, but I go back and listen to myself and I'm like, John, why didn't you just listen to yourself, man? Just listen to what you said in the video, right? And I have traders that tell me, they're like, John, thanks a lot for the video. You told me it was going to be choppy today, man. So I just went out and I took care of business, and that's what I did. And I saved myself a lot of money. So one thing that I will say about the service, not only is there a plethora of information here, but we're also able to help you. I told you guys would hear a dog. We would also be able to save you money, right? And keeping you out of the market. I have some very big dogs. So if you're new to the room, that's Aspen and Parker. A lot of our members already know who they are. They say when they bark, it's bullish. All right, so let's get over into any questions on the morning trend. Anything you guys want to see in there, please speak up. It's cool. If you want to see something else in there, please say so, because my job is to try and make this service the best service you've been in. Why are sometimes the PMZ numbers missing? So sometimes, Jeff, if the morning, because the PMZs are coming at a certain time in the morning, that's why. So if I'm like up and I'm perky and I'm drinking coffee and I'm like, man, I want to get, it's just like any other job, right? And I'm like, hey, I want to get all my stuff and get this out of the way. It might be that the PMZ numbers have not come in yet. That's all. Then the second answer to that is because it's called a pre-market zone. There's no pre-market action, so therefore I don't have any PMZ numbers. Does that make sense? All right. All right. So we got that out of the way. So then moving down here into the focus trades, let's go ahead and talk about those really quick. So I'm going to bring these over so you can take a look at them and look at this morning's. Okay. Now this is really, really important. These are the four, and I really want to go into detail with these because a lot of traders are interested in really, is it okay if I keep four on here, or do you guys just want me to put like one on here so we can see it a little bit better? Vote for one. One, okay. Okay, good. Let's get this out of the way. All right, let's go ahead and let's go with Starbucks. So sorry about the dogs, guys. I can't help that. Parker's huge. I got Bernese Mountain Dogs. They're just humongous, and they absolutely love Ashley. I don't give them enough attention, and when she gets home. So PMZ, Robert, stands for pre-market zone. Okay. So the pre-market zone is exactly what it's called. It's a pre-market zone. What I've done is back tested this, and I have found that in the pre-market zone, when we bid above it, we tend to stay above it. When we bid below it, we tend to stay below it. It's fairly that easy, okay? And so on the pre-market zone, this is Starbucks. Okay, we were short Starbucks this morning. Now remember when I told you right when we started this morning, we had a risk 94.13. It was 10 cents. I remember now. Okay, it was only 10 cents. Now the idea here is that if we would have started neutral, meaning the candle was in the PMZ, okay, then you would only had a 10-cent risk here. What I mean by that is if we started to break down under the PMZ and we put a stop here, you're supposed to take the trade as soon as we break the PMZ. We had 10 cents of risk here, okay? Instead, we get this chaotic candle in the morning, and I told everybody that now your risk has increased, right? Your risk is, wherever you decide to take this thing. If you decide to take it at the close of this candle, then your risk is the top of this PMZ and wherever you take this trade. So it's no longer 10 cent, folks, right? It could be like $1.10 or something like that, okay? So we ended up taking this trade anyways, but why take the trade here, right? VWAP, EMAs, whatever, price comes up, it rejects, it stays down. You stay in the trade as long as the price doesn't close over these EMAs. We gave you targets on this, all right? And that's what you do. You just follow this down. And a lot of traders got out of this a little bit early because we had already traded everything else as well, right? Traded Adobe to the downside, traded Starbucks to the downside. I got stopped out on W, and then NetEase as well to the downside. Okay. Now the PMZ, okay, that's just Starbucks in general. Okay. Now, depending on where this PMZ is in the morning, if you have numbers, that's your risk. What you're looking for is waiting 10 minutes for a price to either close underneath or above, and then we're taking the trade. Understand though, on a chaotic candle, your risk is now increased. You will see that I sometimes take my trades very quickly in the morning, right? You guys know that. And I know what you're thinking. You're like, man, he broke the 10-minute rule. He just went ahead and took it, right? That's because, this is the best way that I can explain that. It's because I know there's only 10 cents of risk. I'm not scared. I'm not scared to pull the trigger. I'm looking at the market, right? Remember what I taught you from the very beginning. If the futures are down and we're underneath the list, and the market is selling off, then I'm willing to go short here. Okay? So as soon as I see this break underneath the PMZ, the stop is going above here and we're going short. Does that make sense to everybody? So yes, so I'm always checking out. So Jeff, I'm already doing that in the morning, right? So that's why you'll see me on the morning trend. I go over the ES, right? The ES is my baby. It's my steering wheel for the day. It's always has been. I don't look at the I look at the Nasdaq, but I don't go to the Nasdaq. I always go to the ES because on the ES, I could trade SPY, I could trade SPX. It's just always been my driving force. Okay. And we tend to basically do what it's doing. There's very few times that we're not kind of following suit there. Okay. So in the back of my head, I see that the futures are down. We're underneath the list, and you guys understand how powerful the line in the sand is. As long as we're under the list, we are short-minded, right? We're short biased. So shouldn't say short-minded, short biased, right? Hey, Omer. So if all that's going on and we're underneath the PMZ, we're underneath the EMAs, and we're underneath the VWAP, and you know what your risk is, go for it. The only thing that can happen is that you're wrong. And you need to understand that in this environment, during trading, you will be wrong. I'm wrong. Remember the day that I got in front of you guys? I lost all 4 trades right in front of you. I mean, shoot. I'd been on like a 2-month winning streak. I jump in here. I'm not trying to show off, just showing you process, and boom, 4 trades. Man, got me. Right? And I front ran all of them. I didn't wait 10 minutes, and I told you guys that. But some days, waiting 10 minutes is going to make money for you. And other days, front running and just jumping in is going to make money for you. Right? So there's going to be variables in the market. What I think is most important, though, is understanding your risk before you get into the trade. If you're okay with the risk, don't be afraid. Already do your calculations, folks. I've taught you and kind of shown you on options how to do that. And if you need that as well, then I'll go over that as well with you. Okay. So this is PMZ to the downside. Let's look at, I think W had an up day yesterday. Okay. So let's take a look at W. This is today. Now W didn't have a PMZ. Okay. Nothing there. Nothing there. All right. Here we go. This is great. This is PMZ right here. This is on 9/6/19. It's a great example. I mean, I could show them all, but this one doesn't have any kind of action here, Jeff. This actually answers your question. There's not much action in the pre-market, not much going on. As you can see, we drop below, right? Take the trade underneath the EMAs. You get a few points to the downside here. And then we got to move all the way back up to the PMZ. Look at this precision. Okay, and then a nice move down from here. So the person that catches or buys the low on this PMZ breakdown, they get only a few points, and then they think, hey man, this is over. And the person that's patient says, no, I'm going to go ahead and take it now because my risk here, right? My risk here, 119.44 into 119.74. Small risk. I'm going to take the short here, have about 30 cents of risk, and I'm going to take this baby down all the way down. Look at this. 2, and we're going to get to this here in a second, the edge. I sure will. I sure will, Jeff. Okay? Okay, this is the edge. Look what happens at the edge. Look, guys, I'm going to show you over and over in this room how many times the edge works, how many times the PMZ works. The only thing that I can tell you is you're going to have to believe in yourself and take the trade and follow the process over and over. It doesn't have to be my trade. If anything you could take from me is that when I'm on a losing streak, all I can do is follow my process. Okay, come in here, say, hey, this is what I'm going to do. As soon as it breaks over this, I'm taking the trade. As soon as it breaks down, I'm going to take the trade. Same thing over and over. Mechanical, methodical, sequential, right? Process over profits. That's it. Okay? Somebody asked about 5 or 10 minutes. It's up to you. I think the 10-minute candle is cleaner. The 5-minute is not. Okay? 10-minute is cleaner. I prefer to get in on a 5-minute, and once you get in, change it to a 10-minute. That keeps it nice and clean. Okay? Keeps it nice and clean. Now, I know some traders, they do the same thing, this process, and use a 2-minute candle. It's going to be up to you guys. Okay? All right, but let's talk about the PMZ in a little bit more in depth here. Depth, not debt. Okay? We always have the line in the sand, right? Now let's talk about some of these acronyms real quick. PMZ, pre-market zone. LIS, line in the sand. I didn't make up the line in the sand. The line in the sand has been around for many, many years. Okay? It's actually taught to me, but let me tell you something. The line in the sand was not taught to me the way that I teach it. Does that make sense? So I was just told like, hey, this line right here works really well, right? And I was like, well, okay, it's just a line, right? But what really happens around this line? I look for demand and supply to be formed. And it's amazing. Let's see, holds above here, long can't hold the list. Right, so the list is just like any other line that's on my chart. Okay, I say this over and over. Any line that you see on my chart, you can approach the same exact way. Okay, what do I mean by that? Let's look at this day. I'm just picking random days, guys. You know, I'm very impromptu. If you want to see it on another name, holler out a name and we'll show you. Price comes down into the line in the sand. We don't take the trade right away. Omer, he took Adobe. Sorry to call you out, but you were bringing it up in the room today. He took Adobe when it came down into one of the edges. An edge, a line in the sand, it doesn't matter. What I say is they usually overshoot it, but your better trade is if you're thinking long bias, price is above the line in the sand. We look for it to be support. Let me draw this out so you understand. Price is up here somewhere. It comes down into the line in the sand. We look for it to be support. But John, it overshoots. That's fine. Walk away, and when price comes back up above the line in the sand and shows you that it wants to reclaim it, place your stop underneath, take your trade up into the PMZ or the targets. Now, I have an amazing video on how to find targets, okay, and I can just send it to you, Jeff, if you haven't watched it yet, because it takes a little bit of time. But that's why I say focus on my focus trades. I'm already giving you targets. I'm already giving you everything that you want. Okay, you have everything on the trades. But here's the thing, I want to teach you how to trade. So I'm going to give you that video so you can learn how to find targets, right? And you can put them on whatever chart you want to. But that's why I like the focus trades. If you guys just stick to the ones that I put in there, you can be like, hey, okay, if it comes into here, then I know what to do here, and hey, he has a target here, and so forth. Okay. So again, list comes down, we look for support, take the trade to the upside, stop goes underneath. You guys have seen many of traders in here in the chat room say, hey, I took the chart, I took it at the edge and it worked for me, or I took it at the list, it's working, right? Very straightforward. Same thing with the list, okay? Now, what if we don't have a PMZ? Let's just take the PMZ out of the equation, folks. All right, let's make this super easy. All right, we don't talk about this much. All right, let's take the PMZ out of the equation. This is just a regular day. W opens up. You throw some EMAs on here. I got a 9, a 22, a 44, and a 55. I got all those on here. Okay. Put the VWAP on there if you want. I mean, to be honest with you, I, I I feel like I don't need anything on here. Maybe just the VWAP, maybe the 9. It's up to you. All right. But all you're looking for is the same thing. Look for this nice move up. Price comes down, rechecks the VWAP, and then we get higher highs. It's in that video that I shared with you guys a long time ago. If you do anything as a new trader or somebody that's just trying to get ahead, buy the higher highs and sell the lower lows. Right? That's simple. Buy the higher highs, sell the lower lows. Okay? All right, so PMZ. Again, I want to make sure everybody gets this. When I do the focus trades, I have your targets there. They're set. Let's pick another name here. What other name did we have today? Here's NTES. Let's go over this one. Yeah, what were you saying about Schwab? High resolution?
They just announced laying off 3%.
They're laying off 3%?
Hmm.
Oh, geez.
Doesn't exactly instill confidence. They let go of the VP of retail, SVP. They didn't lay off anybody in 2008, but now they're talking about doing it. So it's like, yikes.
Oh, wow. Yeah. And we have well, I don't live well, I have a place in Denver, but we have a huge Schwab campus there in Denver. I wonder, they just built that thing too. It's beautiful.
It's
Um,
called the Schwab Mahal is what we call it.
so, I mean, here's Intes today, okay? And we didn't have a PMZ, but we had the edge, okay? And we're going to get to the edges, but I really want to hit on the PMZ, okay? So we don't have a PMZ here, and I talked about that in the morning trend, but that's okay. We had the edge here. So guess what we do? We use it the same exact way, right, folks? So we break below the edge. What are we looking for here? We're looking for it to reject, right? We're looking for, so typically what they do is they flush any one of these lines, they pull up, they retest the edge, as you can see. This could be any other line on my chart. And then they flush it. See this lower low here? This is my signal, okay? And then you could be, if you're even more patient, you could say, okay, now let's drop below the VWAP. I'm going short. Okay, that's exactly what we did here. Okay, does everybody understand this? It looks really easy, right? Hindsight, it looks easy. Don't you guys agree? I mean, I always love when somebody's showing me a chart and they're like, see, but the cool thing is this is exactly what we're doing. We're actually taking these trades. And I had this biggest fear for so long that it looked so great, but I was so scared of taking the trade and I couldn't understand why I was scared. And it's because I had lost before. I had lost some trades. And to be honest with you, I had lost more trades than I had won trades, it felt like. It doesn't even take, I mean, you can win 10 trades in a row and lose two and you feel like a piece of crap. Like you feel like the last two trades are like you. You know what I mean? Like even in a room, I could dish out 10 awesome trades and if I lose one, it ruins my day. It happens to everybody. Oh yeah, you too, Hush. What, are you working at night, man? That's crazy. All right, so same thing here. We're just looking for that to happen. Oh, kids, gotcha. Yep. All right, same thing here. So I want to show you this. This is the PMZ. Look to go short when we break the low. We always look for the line in the sand. We come down to the line in the sand. What do we look for? We look for support when price is above the line in the sand. You get your support. What's your risk? We got to talk about that. What is your risk? We already know what PMZ risk is because I'm giving that to you. But what is your risk when you take every other trade? I think it should be around the same. That's just me. 50 cents to a dollar. There's no sense of you taking huge risk on intraday trades that can turn into something huge. So every trade that we take on these PMZ trades is meant to be intraday. You're making some good money, but if it turns into something wild and good, you can hold some on to take to bigger gains, right? So that's where it's at. So the PMZ, pre-market zone, very simple process. I'll send the lesson out. So again, to remind everybody what it means to take those. All right. Now let's talk about the edges because the edges, I want to go over the vocabulary of the room. We talk about line in the sand and we talk about trendy edges. Now let's go to, I don't know, let's go to Baidu. That's a name I have not traded in a long time. We're going to go over to the daily so that you can see all the edges that are on my chart. And I don't want you to get confused. The edges above price are the ones that we're concentrating on. Try not to look at all the other ones because then you're like, man, there's a lot of lines here, right? But it's really not that difficult. The pink is a monthly edge. The yellow are weekly edges, folks. Somebody answer this that doesn't answer all the time. When price is above an edge and it's moving down to the edge, what do we look for the edge to do? Anybody. Actually, anybody can answer. Support. Thank you. Okay? Awesome. So notice here, price moves. Now the amazing thing about the edges, they are from previous ranges. The edges are already there. This is not an after the fact thing. This is not, hey, look, I'm pulling, the 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 sheets over your eyes and like, oh, magic, right? No, these are here, okay? These edges here were here at the end of Friday, okay? Price moves down. Let me go ahead and draw this for you. We look for support. Does it always work? No, but damn, does it work a lot. And then what is your patience like when it gets there? Remember, I'm always thinking, hey, this might overshoot. If it overshoots, I wait for it to reclaim it, then I take the trade. That's the most important thing there. Okay, you can see price does hold support here. The next week, you can see there's a little yellow line under here. Price holds this as well. This week, right, coming into this, we are on Tuesday, folks. I can't make this up. Let me go ahead and really zoom in here. You guys see what happened there? You see that? I can't make this up. Okay, that is to the tick. And Omer, I'm glad you're here. Look, I always praise Omer. Omer's been with me from day one, you know, and what he does is if I could just use Omer for just a second to make you guys understand, he is the epitome of traders who are working. They have jobs, they have families, they're taking care of things. They don't have time to sit in front of the screens. So his approach is looking at the edges. Okay? And you can correct me if I'm wrong, Omer, and you can jump on the mic. But he comes in here and he looks for these and he sets up the OCO order. Okay? He's looking for price at some point was below, touched the edge, and he's saying to himself, you know what? I'm okay with a $2 risk. Okay? And I'm looking for, let's say, this edge right here as a target. Okay? Let's say that's $6. Okay? So 1 to 3. And he ends up getting moves like this. We're in the room, we're staring at the screens, we're stressed out. He's like, hey, I just got out of a meeting, guys. I just made $5,000. Am I right? He does it constantly. It's funny. But it's beautiful too. So it depends on what kind of trader you want to be. All right? Do you want to sit in front of the screens all day? Do you want to look at the bigger picture and try that out for a couple weeks? I feel that a lot of traders are always in a rush. They think that because there's false marketing and advertising out there on FinTwit that you're going to make $1 million in a week. You don't understand that you got to find what it is that really grooves with you. And when you get that, you'll be at peace and you can just relax. And what you're going to do is you're going to come in here, you're going to find your edges, you're going to create an alert, okay? And you're going to say at or below. When price reaches here, take long. These are just notes to yourself. Take long, $2 risk, right? You're going to say something just like this. You're going to make sure it says at or below. You're going to create it. And when price hits this, yeah, right. That's the truth too. So if you have a job where you can watch, it kind of hurts. I mean, for sure. So you're going to set yourself an alert. You're going to wait for price to hit here, and then you're going to take the trade. Okay. Now these pink ones are monthlies. Okay. What do we do when price gets to the monthly? We just know that it's resistance. It's a magnet. Okay. So we're waiting for it to get there. You always look for confluence. So if you guys are supply and demand traders and there's supply up here. And that's what these are. Basically, these are finding you supply and demand. Okay. You know that this is going to be resistance. But John, what if it's not resistance? Let me ask you guys this. Now let's look at this opposite. Say price goes here. Okay. It's moving. It's doing this. Do you take the long just because it's above? Yes, you can. Jeff and I were talking about this yesterday. You can take it, but understand you're kind of front running the system because so many times I'll show you over and over and over that what you end up getting is something like this. Okay. Yes, you could have made money if you took it from here. You could have made your money maybe up to here, but then you get this pull. Okay. But come over here. I want you to look at this. Yes, exactly. So let me show you this. See this right here? Same exact thing, folks. All right. You see this is basically overshoots, boom, and down. You have to respect them. And I cannot tell you, J-Rod, if you're listening, I don't know if he's in here or not. It's so many times, even our own traders, I say our trendy traders who have been listening to me for 2 years will be like, I'm going long, baby. Because let me tell you something, guys. This is where euphoria is. This is where fear is. I guarantee that 80% of you guys buy here and 80% of you guys, maybe more, sell here. Am I right? Seriously. This is where most people sell. So for those who sell premium, you got it right. This is where right? Stop looking at my account. So this is where you want to sell premium. And that's where we talk about put credit spreads. And this is where you want to sell call credit spreads. This is where directionally you want to be careful. But there are times that the edges do break. You want to know what that looks like? Candle goes up. The patient trader says, okay, cool. It stayed above that because we understand that typically what you're going to get, this is what I look for. Then the pullback, let's just say that was today, Tuesday. I'm looking for this on Wednesday, okay? And then I'm looking for what here? What am I looking for here? That's right, exactly. The higher high. Boom. Stop goes under here. We're looking to trade up to your targets. You guys want to know a really quick way to find targets? Look up to the left, pick your wicks. That would be a double top into this target. This is on the higher time frame. And then guess what? Once you take this wick out, look up to the left. A little bit of supply right in here. Target 2. Okay. Target 3. This wick right here. Targets. Boom. Okay. Just like that. All right. So let's go back. So now let's take it even big. Does everybody understand if you're above the edges? Okay, here's a great one. See how you broke out above this edge? See how you broke out above here? Now these are really interesting. When you break out, this is probably like a Monday or something like that. When you break out and you're up here like this, we typically come back to retest it. Notice we retest, we push up, but then we finally break. Okay. Once you have these on your screen, you're gonna learn so much, and it really is. To me, it's a very simple process. Underneath it, look for it to be resistance. Above it, look for it to be support. Coming down to the bottom edge is my favorite. So what I mean is, if this were to happen, if it breaks here, and then it comes all the way down for some reason, okay, these are my favorites right here. Even if it breaks, once it comes back, the higher the time frame, the higher the edge, meaning a monthly. I love these. This is more of your swing trade. You get in there, then you're looking for these big moves out. Okay, just like that. Look at that. Okay. Now let's take it a little bit further. So I showed you the monthly edges, and these are the weekly edges. Now let's go to the yearly. Okay. And you can learn a lot by following the yearly edges. Okay. And let's see, somebody, I don't know if it's you, Michael, or not. Somebody's mic is on that just came in. There you go. That's perfect. Thank you. So same thing with the yearly. Okay. So we have the yearly edge here. Yearly, yearly. Okay. Nice move up into the year. Now this is for the very big picture, right? Price is resistance until it's not. Now I want you to notice price comes up. This edge was already here. This may not look like a big deal to you. You're talking about a swing trade for all you swing traders, right? And I am recording this, so if you're coming in late, I will send it out, okay? So then price comes back up. It rejects again, okay? These are big moves. This is 263 down into 206, guys. So again, what edge is going to be you? What's going to define you? What do you want to trade? Do you want to trade the weekly? Do you want to trade the monthly? Do you want to trade the yearly? All of them are equally as important. What you need to know is what is your patience like? Okay? And if you guys don't mind telling me, what are most, where do you think most of you guys really are? Seriously. Do you think you're more of like, hey, I'd rather trade like in the first hour or two? Hey, I'm more of a swing trader. Could you guys just kind of give me an idea of those who are happy to type out? Yeah, and it looks like, I mean, yeah, and that's the thing. So the biggest thing I would feel like um, if you're into swings, I think that you have to have a certain personality for that. And you have to have a certain amount of patience for that, right? Because we know that swings work, but we also know that the timing is crucial because if you happen to get in the wrong time, but they end up working, man, it's like a stressful 2 or 3 weeks, right? It's like I can't even imagine, right? You're just like beating your head, like, oh my gosh. Like DE was that way for me. When we first took the trade, we bought at 360 and we sold, I think, at 5, right? And then today, you're able to get out at 7, right? But I could tell you during that whole entire process is like, oh my God, like, why did I buy swings? Like, seriously, right? So if you're okay with that, that's okay. All right. Nothing wrong with that. But just be prepared. So I think Raul was talking to me the other day. Omer and I have talked about this a lot. Is if you want a really good swing setup, the edges are your best opportunity, and you have to be patient. So if you have a couple names that you like, I mean, let's go to I don't know, let's go to something else, something popular. We'll go to Apple and see what they look like. Okay. So here's the yearly on Apple. Okay, you set an alert just like I have at 158. You might not think it's going to happen, folks, but when it does, it can make you some serious cash. I did the same kind of webinar where we talked about Tesla, and the same exact thing happened. Ended up going up like 60 bucks or so. Same thing with SPY. So you set your alerts at these edges, and as you can see, for anybody that's supply and demand, they know that this area right here is actually a real demand zone. Okay, so price at some point, Apple is coming up into the edge. If it stalls here, and for some reason the market were to roll over, this is where I would like to start a long-term position. Okay, and I would be buying something super cheap because it's probably going to be cheap because there's going to be so much fear in here, right? That we can buy like Delta 30s 60 to 90 days out, and we're looking for this move all the way back up here. Okay, these are huge. All right, so this is where you have to do your own homework. Yeah, you want to see like the SPY. So the edges, JB, the edges are lined up. I can't say precisely. They are lined up within a range. So what I found is that supply and demand is a certain percentage of each range. I mean, think about that, right? And so I did this in a video, and I know you're new to the room, but this is like a very simple concept that price does this, and I don't care if this is on a 5 minute for 1 hour or if this is days and this is over a year. Okay. But what we find is price likes to pivot at these areas, certain percentages of these ranges. And then once it pivots down, right, and it does this, it creates supply. I know a lot of you guys follow my buddy Chris, Corianic Trades, and he talks about relief rallies. Okay, what we find in ranges, so we got this entire thing that's a range, correct? At 50%, what happens at what happens at 50%, folks? 50% of any range, what happens there?
On her stomach? I don't know. That's why she's outside. Maybe she was chewing. Did you wipe the floor off? Yeah. Okay. That's what I feel.
Hey, one of you guys have your mic on, just to let you know. Whoever's talking to their wife. All right, so no one's going to answer me. Okay, so when we pivot, we create supply and demand. All right, and so typically it's around these percentages. Let's say 80% of down here, and say 20% of up here, and 50% here. So when price is moving down, and it's never come here. You ever hear about the imbalance? Prices going to imbalance? Yes, 50% is typically your relief rally. Exactly. All right. So you hear about imbalance, right? Imbalance means that price left here so quick that they were unable to fill all the orders, correct? So when we start to see these big pullbacks like this, we look for price to come into the 50%. This is what happens though. We get a relief rally here, and everybody forgets about this down here, okay? Except for experienced supply and demand traders. And then what happens, they start buying calls up here, and then fast forward 1 week later, and we're right back down to the imbalance. Is that making sense to you guys? Now, I want you to understand you can take this, okay? You can take this and put this on a 5-minute candle. Find your range and look at this, and it will impress you, okay? These are like, to me, these are the most pivotal points. You got this one right here. You got this one here. You got like 3 major points within any range. And then that's where I came up with the process. So I came up with the trendy edges. I did the measurements, right, with my ruler. That's what I call it. It's not a Fibonacci, it's a ruler. And that's where I found those percentages. Okay. Then I came up with the 23.6 and the 38.2. Can anybody in here tell me why those are so important? And let me tell you something. We have been using this in here for almost 2 years, and it's very important because it works, right? It works like crazy. So think about that. If the 76 is an imposter, what is the 38.2 if we are bullish? Okay? Let me show you what that looks like real quick. Okay? I need you guys to understand this. Price is moving. Okay, this is the ES. Okay, let's just say that the 38.2 is right here. Okay. Everybody's like, oh man, it's so bullish or bearish or bearish. I'm going short. And you hit that you hit that right on the head, right? It's very bullish in the uptrend. The 23.6 is very bullish. So let's just say this was the 23.6 here. Okay. Doesn't matter. 23.6. And this is a 38.2 down here or something like that, okay? What will happen is everybody gets super bearish, right? And then you see something like this. The 23.6 is so important, folks. So important. I can't tell you how many people I watch start to get super bearish right here, all right? But they forget about the entire trend. You know, like all of a sudden this thing's in danger because you pull back 20%. And that's not 20% in the underlining, that's 20% in the range that's measured. Okay. I think what will really help you if you're having any issues is stay off of Twitter and social media, because I know a lot of you are on there. Stay away from it. Stay away from it. Don't get any outside influences and just try to trade technically, right? All right. So you could see how powerful the edges are. So to summarize, we have the weekly, the monthly, right? And we have the yearly. For me, the better swing trades are when price comes into either the monthly or the yearly. Okay. Now here on the trendy edges, a lot of you guys have them. What you might be wondering here, see this little bar down here? So notice how I only have the yearly up here on the screen. This is the monthly in here. So what it's doing is it's showing me that the current price of Apple is actually above the monthly. See this red and see how it's green? You want to be getting long when it's down at the green, and you want to start thinking about getting short when it's at the red. Okay? Notice when it went to the red, back down. Notice when it went to the red, now it's above it. Okay? Anybody that's listening right now have any questions about the edges? What is this called down here? Is that what you're saying, GS? And please don't be afraid to ask questions, guys. So I just call this like the trendy window. So I can change this to monthly, weekly, whatever. So whatever time frame I'm on, instead of having all the lines on my chart, I can just watch this, and I know that it's coming into the monthly. Does that make sense? Okay, cool. So the edges that I have, everyone in here, and there's a lot of people in here, and I'm not saying this as a sales tactic. A lot of people, my members, have these already, and they donated. All right. And so everybody always asks, like, okay, well, what's a donation? And I always tell them the same thing. I've received anything from $100 to $500. All right. There's nothing that I'm specifically looking for. But I am getting ready to sell these. I'm never going to sell these like to anybody else. Now, there's some cool things about them that even some of our older members do not have. The ones that I'm going to sell are going to include the buy signals, the short signals. There's a bunch of stuff on this. Matter of fact, if you come over here and you look at the trendy edges, the cool thing up here is that you have all these options. So you can show the edges, you can show the arrows. That's your accelerator, decelerator. Okay. We have the breakout arrows, and if you want to, you can add the cloud above the edges or below the edges. The banner is included, so the banner up here that says, hey, the yearly super bullish. So real quick, guys, so you understand this, the yearly super bullish, what that's saying is in a year time frame, that price is above what? Can anybody guess? So during a year, it's saying right here, Apple is in a super bullish trend. Exactly, Jeff. It's above the 23.6. So it's already giving you that. So for you folks that are more into swing trades, you can feel safe that, hey, as long as I'm staying in the super bullish trend, man, about 90 days out, I'm not really concerned if it's going to break down below there. Right? So I love that about this. All right. And then down here, show only last period. You can elect to have it on or off. So what that means is if you want a nice clean chart, to post out on Twitter or whatever, you could take that off so that all you're seeing is just the current edges. And then we have alerts. So the alerts actually, they pop up in your alert section over here in your messages. So like if you're walking around the house and you have this thing on a speaker system, it'll, whatever alert you put in there, it'll ding at you and you'll be like, oh, cool, Apple's wherever it's supposed to be. Okay. So that's kind of like, what you get with the edges there. To me, it's a lot. And you get this little window down here. It's pretty cool. And then somebody in the room actually built this to go into TradeStation as well. So I'm talking to them as well and see if I can get the script from that as well. So for anybody that has TradeStation. All right, so the next thing I want to talk about is supply and demand. And this is a very touchy subject for me, and I know you guys have heard it a million times, But I went to OTA, and OTA has a patent. Okay, so I am not allowed to teach their stuff and take credit for it or even tell you guys, like, this is exactly what they showed me. Okay, so again, I tell traders without going into detail, okay, to make this really easy for you, okay, we have 4 different types of setups that come from demand and supply, okay? You got a rally-based rally, you got a drop-based rally, all right? That's your demands. And then on supply, you have a rally-based drop or you have a drop-based drop. Very simple. And you can go out on YouTube and they literally have videos where they show it. So let them get in trouble. But there were some licenses out there that they couldn't get rid of the videos, so they had to keep them on there or something like that. So you can go out there and research that, but you can see right here, okay? I mean, I teach you guys this. This is what I'm looking for, right? You see my arrow, rally, base rally, okay? Drop, base drop, right? That's called supply. Notice how when price left here, it came back up into here and rejected because it's supply, okay? Price came back down right here. Let me go ahead and draw that for you. Price came back down. It came into a rally-based rally. Okay, it's pretty simple stuff. It really is. But let me tell you guys something. Just because, this is the crazy thing. It shouldn't even be patented. This is how I feel. Just because you know how to identify those 4 little zones, it does not mean you know how to drive this bad boy. Okay, and that's what I say. It's very easy for people to get out there and show you pictures of supply and demand and say, see, you see what it did? But half the people have a hard time trading it. Okay. So supply and demand. Do you guys want like a quick course on it? The easiest way? So, demand is where people want to buy. Supply is where they have too much. All right. They need to go back and find buyers. So in this case, all right, no matter what we do, if I hide this over here, every time that we look at a trend, you guys should eat this stuff up, I'm telling you. So here, we have a trend. We slow down, we have a trend. Notice where price comes back to. RJR, wouldn't you say that's probably 50% or so right in there? Right? That's your relief rally. Okay? Now draw again. You guys have to practice. You have to draw, Okay? Here's your trend. Right here, that's the new trend. Price comes back. Where does it bounce? About the 50, right? Price goes up. Price goes sideways. Price comes down. This one goes back almost 88.7% of the way. My favorite numbers are 50, 88.7, 23.6. Now, do most of you that are listening right now, do most of you feel comfortable enough to identify range? It's okay if you don't. Please speak up. Okay? I'm not sure of everybody's experience in trading in here. Some of this might look very foreign to you. So everybody that's listening feels very comfortable with identifying range. You'd be surprised. I tell some traders like they have such a hard time, you know. Basically, if you can distinguish between a line that looks like this, a line that looks like that, and a line that looks like this, you should be good. So what I mean is, all right, when I look at this entire thing right here, All right, from here, I don't know why it's doing that. So from here to here, you can see that price moves up fairly nice, right? So that looks like that line. Price moves down right here. This is the range that we would apply the methodology to. From a pivot low to pivot high, when price pulls back, where does it pull to? 50%. Okay? Here, we have started a new journey. And it looks like when you look at this, notice it gets here, but look how far it pulls back. Okay? Probably about probably 50%, maybe 38.2% right there. Now, this is Apple, I think, that we're looking at here. Yeah. Now we've started a new trend. So when I draw that out for you guys, can you see that a little bit better? Like this is definitely from here to here to here. Okay. Now this goes for this. All right. I want you to understand that. This is down. So when price moves up, we look for what? 50 to 88.7%, guys? 50. Okay. 76.4. Close to 88.7. Just like that. Okay. And I want you to practice this, all right? This might seem boring, but this is very important to be able to apply the methodology that you have the right range. Okay? One more time before we finish this. Range, sideways, range, sideways, down, sideways, up, sideways, down. You guys see what I'm doing there? I know it seems ridiculous, right? But it's so important. So now when you're able to identify them and you want to apply the Fibonacci's, you're going to have the right range and it's going to make sense. Okay? Yes, I would. Exactly. I do. The sideways means nothing to me. The only time sideways means something to me is if it starts to roll over and become a target for the 38.2 to the 50. Does that make sense? So if it just rallies or drops and then just goes sideways, and then when it drops again or rallies again, I'm just going to use that range again. Okay? So I do not use it. Okay? All right, so let's talk about risk versus reward. We talk about this a lot. I think this is very important. So I'm just going to reiterate. When you're taking a PMZ trade, most of the times I'm going to tell you the risk, okay? But you should know and know how to identify the risk for yourself. Please speak up. Who in here in options trading 100% of the time before they came in here just kind of like bought whatever and just kind of, went with it? Like, oh man, I want an Apple $200 call. 500 bucks sounds good. You jump in and boom, right? No plan. Or you're just like, hey, I don't care if it goes to zero. Yeah. Robert, I'm not trying to read your mind, but I think that most of us do that, right? I don't do that at all anymore. Okay, I really don't. But I need to make something very clear. You need to, before you go to bed tonight, all right, some of you are probably like, man, it's already my bedtime. You need to figure out what it is, and even if you want to write it in here, let yourself go, be open to the room because we're all family. What is it that you're comfortable with? Seriously, what are you okay with losing? Because we're not going to win every trade, guys, girls. We're not winning every trade. Okay? So you need to understand that. So when we lose, what are you willing to lose? What are you okay with? Some of you guys have kids, you know? That's like me. I'll take a $3,000 loss. And I think to myself, man, I could like bought a little motorcycle for my kid, like a little scooter to ride to the beach. Or, I lost 500 bucks today. I could have easily paid for like 5 meals, right? So, I mean, money is important to all of us, whether you have kids or not. Maybe your wife or your husband wants something, right? Or maybe you're just trying to save up. So the idea here is to supplement, some of those hardships that some traders want. Like you just want to pay an electricity bill, right? Like my electricity here in Florida, it's hot as hell. It costs me $240 a month. It's pretty expensive, right? So when I make a trade and I make 240 bucks on the day, I'm like, man, I just paid for my electric bill, right? And I'm only taking a trade that I could possibly lose 50 bucks on. Take enough of those, they can definitely hurt. So that's important that you understand how much you're willing to lose, and that's why I try to give you the risks with the PMZ trades, okay? But you have to obey them. You have to obey them. Even if it means getting in and out, if you can, you have to obey them. And let me look here in a minute, Eric. Give me 1 second. So if your risk to reward, okay, for me is about $2 at max. For shares, it's only like 50 cents to $1 because I feel like my system is so good. If I'm wrong, then I'm really wrong. Does that make sense? So I don't want to be in the trade anymore. But I'm willing to only risk 50 cents to $1 because most of the time I'm right on these trades and I can make money from them. Okay, so that's when you know you have a good process. On the option side, I'm going to say this one more time. Write it down, or I have this recorded. Look at the delta. I read a tweet from somebody on Twitter not too long ago saying that it's not that important about the Greeks. Well, you know, maybe not. You listen to me real quick and you tell me if you think it's important. I can tell you how much we're going to lose on a trade by looking at the delta. Okay? If we buy a delta 30, it means we're going to lose 30 bucks around there, 30 bucks for every time the dollar or the underlying goes down $1. Okay? So if I buy 10 delta 30s, right? And it costs me $1,000, right? And I lose $1 in the underlying equity, I'm going to lose 300 bucks. So I know that I can front $1,000 for this trade, and on my trade, if I know my risk is $1, then I know I can only lose 300 bucks. It's very important. So so if you jump into a Delta 70 and you buy 10 contracts and you go, well, John's okay with $1, so am I. But then your Delta 70 times 10 is $700. Then you're like, oh, dude, I'm not okay with losing 700 bucks. So it's very important to pay attention to the Delta. Okay? Very important. All right? So just understand that. Me personally, so right now, like I said, on swings, looking for Delta 30s, uh, you know, I bought like a Delta 20, and it's okay, you know. Over here in our regular account, the Apple came back, you know, and and the ATVI is coming back as well, so it's all good, and there's like nothing to stress about. It felt pretty good. Let's see. So please, on your risk to reward, I cannot tell you if you don't have any kind of parameters, you're going to end up going broke. in this game, especially if you just strictly trade options. You gotta be okay with the probabilities. You gotta understand that you're gonna lose, but when we lose, we have a defined risk, and that's it. Okay. All right. Eric asked, so John, after looking at fibs on Apple trade, it came back up to the 76.4 from pivot high to low. Would that be a short in itself, especially if you saw a reversal in lower time frame? So for me, are you talking about just on today, Eric, or are you talking about on this big weekly time frame that I have? And just real quick, guys, with the risks, so then it comes down to time frame. And like everything that I've taught you today, you can take this and you could put it on any time frame. Okay? You could put it on any time frame. You're just going to have to figure out where your personality lines up the best and the kind of trading that you want to do. Okay? The PMZ is amazing. I showed you guys today. I took the oil trade. I mean, just really quick, man. Quick 70 bucks. Doesn't sound like a whole lot, but I do that constantly. And it adds up, guys. It's just process. I don't even look at my P&L. I just trade it, right? That's it. So it kind of depends. So without even looking, Eric, if Apple is, say it's uptrending and it reverses at the 76.4, it's in an uptrend unless it breaks below the 618. So the 76.4 is just the imposter. So what it does is it rejects at the 76, comes back to the 618, and then it moves all the way back up to the previous high or the 88.7. That's why I call it the imposter. All right. So, and then moving down into time frame again, like I said, time frame is going to be up to you. As I learned, I thought it was really cool, and I pass it on. Time frame is really based upon your needs as a trader, your income needs. People that trade 5-minute candles, they're looking for making money, within the next hour or so, 30 minutes to an hour. Okay. If you're trading on a daily, you should be looking to get paid like, at least 2 to 5 days. And if you're using a weekly, you need to be open to not really cashing in on something like that until a week or two. All right. That's right. Yeah, exactly, Eric. All right, guys. So the bigger thing, so let me just summarize really quick. Being at Trinity Options, there's a lot of options for you. Please make sure you look at the broader market by going to the trend channel on Sunday before the market open. Read my notes, look at the charts. There's a reason why I pick all those charts. They give you an idea, well, they give you a really high probability of what the market is going to do when we open up. Okay. The morning trend, just listen to it if you have time, right? That way you can see kind of my thoughts on what I'm looking for. Look at the focus trades. All right. The best thing I can tell you to do is for myself is, how I trade it. I'm not going to tell you to trade it. Again, I'm not a financial advisor, so I'm not trying to tell you when to, do this and that. So on the line in the sand, it's very simple. The line in the sand across the board is different. It's not cash close. It's not a secret. If you're in my room, it is the close of the 1400 candle in Colorado time. Okay, the 14 5-minute candle, 1400, nothing else. It's different than the cash close. It does vary. Okay, the edges, right? The trendy edges, we went over the yearly, the monthly, and the weekly, how to trade them. If we're above them, look for them to be support. If we're below them, look for them to be resistance. How do you know to take the trade? You can be patient and wait for the setup for a higher high off the top of an edge. You could put your stop under, whatever that means to you. For me, that means about $1.50 to $2. Okay, if I'm going short, if it breaks underneath the edge and it resists, it tests back, and then it drops lower, I put the stop above the edge and I go short. Very simple. The line in the sand, it is the 1400 close Colorado time. on a 5-minute candle. And then on, let's see here, and then moving down, just make sure I cover everything right before the end here. Supply and demand. Like I said, there's a lot of good stuff out on the internet, guys. I mean, you really can learn it. You can learn the structures in like 5 minutes. I'm going to teach you how to basically be in the right mind frame and how to trade those in between. Okay. And then time frame. Figure out from this lesson what time frame is going to work out for you, right? And then the chat room for anybody that's coming in late. So I'm not sure how long that this chat room will be around. And I say that because, I was notified that I can't do this in this room. Well, they didn't say it like that. They actually didn't give me an answer. So I'm just looking into it. I might have to create a different room. So, but I'll keep you guys in the loop. And if anything comes up, I'll definitely let you know. And where am I going? Where's Trendy Options going? So I'm looking at tiering my service. So everybody that's in here is grandfathered in. That's how I look at it. So you're always going to be, if you need something, I'm just going to email it to you or whatever. If you need some more lessons and so forth, I'm looking at, getting more into the education piece of this. And I'm trying to brand and get bigger. I think that's the idea from anyone that's creating a room and so forth. So I enjoy my time being able to reach out and talk to people on the phone, teach them one-on-one, and do that kind of stuff. So